you all for joining us today. The Horse Council's virtual town hall on the financial options available to Maryland's horse community during the COVID-19 pandemic. In the last 6 weeks, the MHC staff, led by our Executive Director, Carrie Hull, have worked with our Executive Committee to stay on top of the unprecedented changes that have and will continue to affect our horse community. We continue to publish these updates on our coronavirus.mdhorsecouncil.org webpage. And about 10 days ago, we came up with the idea of hosting one or several virtual town halls. And because of the criticality and time sensitivity of all the financial applications processes, we decided that we would address the financial resources available to the horse community as a result of the pandemic. Again, our staff and executive committee has worked tirelessly to put this all together in a landscape that seems to change every hour. And I especially want to thank Jane Siegler, who was my predecessor as president of the Horse Council and currently heads our extremely active legislative committee, and Corinne Pulkin from our executive committee for the hard work on bringing this session to you today. I also want to thank all of our MHC members for joining us today, because without your continued support, we'd not be able to be here to put on events like this. And normally this type of event we would have put on just for our members, but because this pandemic threatens everyone, and so like all of the documents we published dealing with the pandemic, we feel it's the right thing to do to open this up to the entire community. So if you're watching this and are not a member, we welcome you and hope that you'll get value out of this session. And if today, tomorrow, or down the road, you're able to join the Horse Council, we would welcome your support so we can continue to serve Maryland's incredible horse community and all of our horses. Finally, I want to give a big shout out to all of our Horse Council sponsors: Agape Pet Services, Maryland Horse Industry Board, Maryland Horse Trials at Lockmoy, MARBIDCO, Maryland Thoroughbred Horsemen's Maryland Thoroughbred Horsemen's Association, the Thoroughbred Retirement Foundation, Mid-Atlantic Farm Credit, Maryland Horse Breeders Association, Days End Farm Horse Rescue, the Right Horse Initiative, and a special thanks to our premier sponsor, B&D Builders. Now I'm going to turn it over to Jane Siegler to introduce our program today.
Thanks, Neil. First, I want to say that if you hear snoring in the background, that is not me, that's my dog, Honest. I just want to also say how lucky we are to have these great experts here with us today to sort through the avalanche of information that has been pouring out about available resources and to explain the dizzying array of options. I just want to set out here a couple of concepts that you should keep in mind as you listen to these presenters and formulate your follow-up questions. I hope that the speakers will correct me if I say anything here that's not quite accurate. Today, we're talking primarily about programs directed at employers. There are also programs benefiting employees. Some programs are open to nonprofits. Some are closed to certain categories of nonprofits. Some are only available to businesses with more than one employee. Some are available to independent contractors and sole proprietors. Some are only open to businesses within a certain range in the number of employees. Be aware that the information you submit will generally be kept confidential. However, if you are awarded assistance, that fact and potentially also the amount may be public information. You want to make sure you understand the difference between a loan and a grant in these programs. A grant is generally an outright gift of the money, meaning you don't have to pay it back, although there may be some conditions attached to its use. A loan obviously means you have to pay it back. Some of the loans in these programs are forgivable, and that means if you meet certain conditions, you may not have to pay back all or part of the loan. The use of the funds is conditional in some programs. Some must be used for payroll or other current operating expenses. Some must be used only for purposes related to changes in your business model going forward. Note also that there are programs offered at the federal, state, and in some cases local, meaning county or even sometimes city level. In some cases they overlap. They are not necessarily mutually exclusive, meaning you can apply for all that you're eligible for, but some of them will exclude or penalize you if you have applied for or been accepted into others. In some of the programs, you apply directly to the agency administering the program. In others, for example, the Paycheck Protection Program, you must apply through banks. If you have additional questions after today, our generous participants will be available to respond to them. So again, thank you to our presenters, and we really look forward to hearing what you have to say.
And now Corinne is going to introduce our speakers.
Yes, so first up is Brooke. Brooke is here. So Brooke is an attorney, and he is the current treasurer of the Maryland State Bar Agriculture Law section. His area of expertise is, well, he has several, but relevant to what we're doing today is specifically in debtor-creditor relationships, bankruptcy, and is become, as a result of this crisis, very familiar with the CARES Act. So he will start us off with a discussion about how the CARES Act applies to the businesses that are, equine businesses and folks that are on this call.
Well, good morning, everyone.
Go.
Thank you. So I entitled this, Get That CARES Loan, Some How-To. So I actually applied for a CARES loan on behalf of my law firm. And preliminarily, I should say my remarks are not a substitute for good legal and accounting advice for your particular situation, because this is a subject where the devil really is in the details. So I'm going to kind of go through these slides pretty fast, but the slides will be made available to you, so you don't need to listen to me read things that you can, basically read faster than I can talk. So the takeaways before you lose interest. Yes, Virginia, there really is a Santa Claus. There is loan forgiveness, and it's pretty substantial under this program. But
next slide, Neil, sorry.
Yep. Oh yeah, slide 3. But it's a square peg in a square hole. You can borrow for a bunch of things that I'll talk about, but the loan forgiveness only pertains to 8 weeks of certain expenses from the loan origination date. Now, some people have been asking for the date to be deferred. The only risk I'd note on that is I keep hearing noise in the newspapers that they're running out of money. So I can't speak to the status of the SBA guarantees, which is how this works. And I'll talk a little bit about that in a second. So there's specific purposes for the loans. This isn't a working capital loan that you can use for buying new machinery and fixing up certain parts of your facilities and so on. This is focused on payroll and sort of what I call keeping alive expenses. And so we're going to talk about payroll and the definitions, and then there's rent, mortgage, interest expense, and utilities. The biggest issue is that you have to be under 500 employees. And I'm going to assume most of the people who are on this call probably qualify as being under 500 expenses, or 500 employees. We just have 8 employees at my law firm, so obviously we easily qualify. Okay, so let's go to slide 4, and let's talk about payroll. So you can use the loan for payroll costs related to group health insurance, and employee salaries and commissions and so on. Well, is that everybody? Nope, not everybody. It excludes anyone whose annual salaries and wages, retirement benefits aren't part of it. If your compensation exceeds $100,000, you can't be in the program. Another little catch in this is that 75% of the proceeds have to be used for payroll. And you're going to have to do some keeping track of so that someone doesn't come chasing you down. On to slide 5, the other expenses, payments of interest on any mortgage obligation, pretty important in the farm industry. Rent, you may be paying rent for land that you grow crops on. Utilities, and then interest on any other debt obligations that were incurred before the covered period. You ask, what's the covered period? The covered period is anything after February 15th of 2020. And that date is significant for a couple reasons. At my bank, which happened to be M&T Bank, they only are making loans to those who had an account at the bank as of February 15th of 2020. So in a sense, they're prioritizing their existing customers. Okay, so let's get into number 6. what I call getting into the weeds on the payroll. Back 2 slides there. Okay. The sum of payments of any compensation to or income of the sole proprietor or independent contractor is included, as well as your kind of regular employees. Got to be wage, commission, income, net earnings from self-employment or similar compensation. Can't be more than 100,000 in a year, so it's annualized. Now, if you pay somebody for 6 months and they get, $50,000, well, they're going to be disqualified. It doesn't include, and you can read down there. Basically, it doesn't include certain kinds of things. Forget about chapters 21, 22, or 24 of the Internal Revenue Code. The taxes that are included are your typical employee taxes that you have to file what's called a 941 form for, which is, we call them trust fund taxes in law, but they're the income tax withholdings that you do from employees. And then the 940 taxes, which are the FUTA taxes, federal unemployment or state unemployment taxes. So those are the 2 biggies. So on to the next slide. Number 7 has some more details in other parts of the statute that give you a pretty good idea of exactly what's going to be compensation. And you can read this laundry list. It's your basically wages and whatnot. Okay, let's move on to number 8. The other expenses I spoke of before, and they're pretty straightforward. I quoted the statute here. You either fit in them or you don't fit in them. One thing about utilities, I think probably internet connectivity is probably going to be covered. Obviously, electricity, telephone, those kind of things probably are covered. So let's skip on to loan forgiveness. That's the next slide. So this is the part that everybody got excited about. They're like, oh, wow, I get this money. Wow, this is great. It's free money. Well, not quite. It is and it isn't. The key is, first of all, remember, it's going to only be 8 weeks worth of, I'll call it stuff for a second, but 8 weeks of these specific list of items. And so what's the forgiveness? Well, here's the list. You got payroll costs, you got the payment of interest, you got the covered rent obligation, and you got the utility payment. Now remember, payroll cost was a pretty big category because it included, among other things, things like retirement benefits, your accompanying taxes that I spoke of, the 940s and 941s. So let's go to the next slide, which talks about covered loans. There's a definition that relates to the Small Business Act, Section 636A, as it got amended. But I'm going to leave it to Greer to tell me if there's anything special about that in his presentation, which comes next. But it's pretty straightforward. You can see covered mortgage obligation. Key thing, got to be your liability, can't be a guarantee. Has to be a mortgage on real or personal property. So a little tricky as to whether it would cover an equipment loan. Probably a little dicey if it's not part of your main real property loan. And it has, but the key is it's got to be before February 15th. I talked about the 8-week period. Utility payment, you can see down there that laundry list of what could be forgiven. Electricity, gas, water. Transportation, that could be a biggie for gasoline, for moving your horses around. Telephone, internet access. Okay, next slide is 11. So what do you got to do to get this? So I talked about the February 15th and the fact that my bank, M&T, wanted you to be a depositor by then. Another bank, which I'll leave nameless, was sued in Baltimore because they said that only people who had outstanding loans with them would be taken, not all their depositors. Don't know how that turned out. I think maybe still pending before the court. Okay, so what do you got to get together to get this? You can read owners' names, addresses, all this personally identifiable information. Why are they doing that? Because, anybody could just walk up, say, oh, yeah, I have a business. I want this money. You may not get the loan forgiveness, but you might get the loan. And then you don't, if you're just going to disappear into a hole in the ground, you don't care whether there's loan forgiveness or not, because they're never going to collect it. So they're very concerned about fraud, but you also need to be concerned about transmitting this information carefully and make sure it's on a secure outlet. We got together payroll records. We got together payroll ledgers. key item, no personal guarantee required on these loans. Very unusual for small loans. Let's skip to the next page in the interest of time. Some other stuff. My bank didn't require a financial statement, but you might want to have one handy because maybe your bank will, because they want to show that there's feasibility. The interest rate is 4%, not the best you can get now, but pretty good for small businesses. Payments are suspended for 6 months, and then you start the payments after that. So this really is an interim, line of credit for specific things that can really help you. My bank put a limit of 2.5 times monthly payroll that you could borrow. And of course, the 75% requirement, your bank might do something different. How do you not get these loans? And I think, again, Greer could probably talk about these briefly, but if you've got delinquent taxes, especially delinquent payroll taxes, you're not going to be getting these loans. If you've got delinquent government guaranteed loans, and the one that I thought of that really is notable here is where folks have guaranteed their child's loan because they get a little bit less interest rate. And those loans are not dischargeable in bankruptcy. And if your kid's defaulted on the loan, it may disqualify you from getting one of these loans. Criminal convictions, that's probably one reason they want the personal information with respect to the owners. My kind of warnings as we kind of get to the end here, there are going to be lots of people who are going to solicit you online to help you. Stick with your licensed professionals, your accountant or your lawyer. You do not want to be handing out this personally identifiable information to people that could misuse it. Why do banks want to do this? Because they get a guaranteed 1% margin on these small loans if they're under $350,000, which many of them will be. Let's go to the next slide. A few other things. Might want to segregate the loan proceeds because then it's easier to track that you used it for the proper expenses. If you're an LLC, a lot of people found an LLC, they never bothered doing an operating agreement. You're going to need to get that cleaned up. Make sure you know your stock ledger, who's the owners and who's not the owners. I'm not suggesting the government's going to aggressively prosecute this, but if they find out you default on a loan and you've made false statements to get the loan, the government can be pretty hard-nosed if they get unhappy or decide to make an example of somebody. One thing our bank asked for, which I didn't expect, was W-3s, which are they're the covering document that goes with the W-2s for your employees. K-1s for partners, if you're a partnership. Remember, partnerships also include sub-S corporations and, in a sense, LLCs that have made done what we call check the box and have elected to be treated as partnerships, which is a pass-through entity. Might need your Schedule C. My bank asked for the Form 1099s. Our retirement and healthcare benefits are paid through a general ledger entry, but I had to do some backup that went with that. My payroll service had some information I could find useful. And I scanned a lot of these documents before I started the process, because once you kind of get into the online process, sometimes it's hard to get onto the server. So once you're on, you want to get it done and finish that. And that gets us to slide 14 and the end. Quirks. Who can get paid from the loan proceeds? Those under 100,000. It's a slightly different calculation for loan forgiveness for those people. And you're going to have to sit down and talk to an attorney and study the statute to get that squared away. Retirement benefits, though, don't fit in that kind of screwy calculation. There are limits on compensation increases. You can't suddenly give your employees an increase just so you can get a little more money in the 8-week period. Tipped employees can be covered. Some of you might operate microbreweries off your property. Those could be covered. And if you're paying people under the table or tips weren't declared, you might not want to put them in the list. And you might not want to give them any money out of this payroll. And I think there's one more slide, Neil. So it's doable, but it's very paperwork intensive. One thing I noted about the horse industry that Corrine kind of enlightened me is that many of you have very light payrolls and very light amounts of activity in the winter. So it might be that this 8 weeks could actually end up giving you a little bit of a bonus in the sense of you think, oh, I'll get 850 seconds of my year's expenses in these certain categories. It might be that because of your normal activities during this period, you actually end up with a little bit more than that. So I think that's about it. We'll have to be taking, I think, general questions later, if I recall right.
Yeah, we're actually going to take those if you can submit those in the chat.
Yes.
Yeah, well, thank you, Brooke. I know for everyone, we did go through this very quickly, but as Brooke mentioned, we will make the slides available afterwards. And of course, we will also be taking questions through the chat at the end. So we will move on then to our next presenter, Greer, who is a business consultant with the Maryland SBDC. And let's see, where is he up?
Yep.
He will be in a second.
And Brooke's contact information will also be available, so he is prepared for an onslaught of questions after this presentation, if that should be the case.
We're happy to take general questions.
Well, good morning, Greer. Thanks for joining us.
Morning. Yeah, thanks for having me. So I just want to start off, and I'm sure most of you may not be familiar with the SBDC, but we're partners with the Small Business Administration in DC, and we're funded through them. So we're here to help entrepreneurs. And something that I have worked with a lot before is people who don't really understand who an entrepreneur is. And we have a very vague definition. So I'm going to say anybody who is a sole proprietorship, owns an LLC, S Corp, C Corp, or if you're a 1099. Any of those people, you own a business in some sort of a way, so we can help you and again, help answer questions. So if you can go to the next slide. So this is just a little bit about us. We do one-on-one consulting where we'll sit down with entrepreneurs and help them go through whatever issues those may be. At the moment, 99% of the people I'm working with are about this COVID crisis. And we also do a lot of webinars. We're having 2 or 3 coming up this week, again, to help answer additional questions. The links to our signups are on this page. Next slide then. So then what we're working on now is the same thing that the Horse Council is putting together a list of different resources for business owners and entrepreneurs on how to handle this crisis. So we have 2 really good pages that I just want to spotlight before I go into some of the SBA programs. Is on our website, we have a link of all of the SBA and Maryland, state, federal, local resources available. And we've also put together what we're calling our SBDC Survival Guide, which is updated probably 10 or 12 times a day. As soon as we get information from the state, county, federal government, it gets pushed right onto that page. So you get up-to-date information. What we have also done is highlighted all of the frequently asked questions about these programs. So as Brooke rightly went over, there's a high-level overview of the PPP program. I think I've put about 50 or 60 different questions on that program that a lot of businesses ask, and a lot of the other state and county programs as well. So those are great websites and resources to check out because what I'm going to do is, again, a high-level overview. Next slide then. All right, so what I'm going to talk about is kind of the SBA funding, federal side funding. And Brooke already went over the payroll protection program, so that makes my life a lot easier because that's the complicated one. And then I'm going to go over the 3 remaining programs that they have. One is the EIDL loan program, or EIDL, if the SBA is not as big of a fan of acronyms as I am. Then they've got the SBA Express Bridge Loans and the SBA Debt Relief Program. All of these funds are designed to keep your business alive during these trying times. They're not designed to help you expand or grow or enter new markets or do anything like that. Next slide. So the EIDL program. And the first thing I want to mention is there is an exception to who can apply for this program. So not everyone listening is going to be eligible. And that's what I want to go over first before we go over any of this, before the size requirements or the income requirements. Agricultural enterprises, specifically farms, are not allowed to apply. Now there's a lot of wiggle room in that. So if you have specific questions, I would say reach out to me after this, because depending on what your NAICS code is and depending on your primary source of income, there are ways around that exception. So again, it's the same small business requirements that we talked about before, below 500 employees. So proprietorships, independent contractors, self-employed people, and nonprofits are all eligible to apply, provided they meet certain requirements. Again, agricultural concerns, there are ways around it. There are ways that we unfortunately can't avoid. The program is designed to help small businesses get cash quickly and survive until they can either make it out of this or get more funds from our local government. So the way the program is working at the moment is they have a very quick 15-minute application that you can go through. The most complicated piece of information they're going to ask for is your EIN number. From that, you are eligible for an advance of $1,000 per employee, up to $10,000. Originally, they were saying it's going to be funded in 3 days. Now we're looking at more about 3 business weeks, so about 15 to 20 business days. Really depends. The SBA typically gets about 60,000 business applications a year. We're well over 30 million at the moment, so there's a lot going on. After the quick approval, we'll say, of between $1,000 and $10,000, then businesses are eligible for up to an additional $15,000, and depending on your business structure and size, that cap can go as high as $2 million. But again, there's a lot of things in flux, and probably by the time I start answering questions, the SBA is going to change the guidelines on us. So that's why I really recommend you look at our survival guide and stay in contact with myself or some of the other presenters, because information is constantly in flux. One last note on that, the advance on the loan between the $1,000 and $10,000, that is considered a grant. So you don't have to pay that back, and it doesn't have the same requirements as the payroll protection program, where provided it goes to business expenses, it's completely forgivable. So then next up is the business loan, SBA Bridge Loan Program. So provided you are a small business, you are eligible for this. This can be turned around in a matter of hours. I've seen people walk into the bank and walk back out with the $25,000. So again, this is another loan program, and it is not a grant, loan program, which is designed to help small businesses survive in this short interim when they're trying to figure out what they need. They have lower interest rates, very fast turnaround time, and what they can be done is repackaged into the SBA EIDL loan. So one of the amazing things about that loan program is that it's a very low interest rate, I think 3.75 or 3.25 at the moment, and it can be taken out over 30 years. So this $25,000 payment that you get right now can then be repackaged in about a month to a 30-year note, which would probably have, I don't know, $100 monthly payments. So it's not going to make a big difference in your overall expenses. They can be repaid at any time. There's no prepayment penalties. There's no issues with things like that. So it's a really good alternative if you need cash today or your business is going to get in trouble. Next slide. All right, and then next up is the SBA Debt Relief Program. So this is a really important one that I think is overlooked a lot of the time. And if your business has an existing 7A loan, 504 loan, or a micro loan, basically any of the loan programs run through the SBA, what you can do is ask to be a part of the debt relief program. You're not supposed to have to ask, but I'm recommending people do because banks are still getting used to set up this situation. But essentially the SBA is going to cover your debt and interest payments on those loans for the next 6 months. So basically they're going to make the payments for you. Now the SBA will not cancel your pre-authorized automatic debits. So basically if this comes out on the 25th of every month, you need to let your bank know that you're going to be canceling those in order to allow the SBA to pay them for you. If you don't cancel those payments, they'll still go through and they'll just be applied to the principal interest that you owe. But again, you really want to reach out to your bank. That's the biggest takeaway of anything that I might say is reach out to your bank and make sure that they know what programs you're interested in. This also applies for if you are looking at getting an SBA loan within the next 6 months, whether it's 7A, 504 or microloan, the SBA will cover the cost of those loans for the next 6 months. The other good program that they have created, which I'll just piggyback onto this, is if you have an existing loan that is not through the SBA, there will be automatic deferments sponsored by the federal government of up to 6 months. So if you have existing debt, reach out to your lender and tell them that you'd like to take part in their deferment program. And depending on the way your debt is structured, it can be anywhere from 60 days to 90 days to 6 months, where you just won't have to pay anything on that debt. Some are putting a pause on it, meaning no interest will accrue. Some are still allowing interest to accrue. It depends on your bank and kind of how friendly they are to small businesses. I think I have one more slide. Yep. So this is my contact information. Again, this was super high level. Our survival guide has a lot more nitty-gritty information. And if you give me a call or send me an email, I would be more than happy to walk you through any of the programs or walk you through how you may be able to qualify for, or maybe what some disqualifying factors would be.
Great, thank you, Greer. That was fabulous. And you have his contact information, so I expect everybody here will be getting a lot of calls after this is over.
Yeah.
Okay, so we are moving on now, and we're not too far off actually, time-wise. We're moving on to Paul, who is with the University of Maryland. He's an extension legal specialist, so he is our another attorney on this panel. He will be talking about some programs available through the USDA, and he will also provide, I think, I saw some resources and contact information in your presentation.
Yes.
So welcome, Paul. Thanks for joining us.
Thank you. No problem. Thank you guys for hosting this today, and I'll wait till my presentation's up. So yeah, I'm going to talk to you a little bit today about USDA Resources Available, and I'm going to limit it to mainly some of the loan programs and talk a little bit about the CARES Act funding that is available through USDA, and then some other resources that are being developed mainly on helping explain some of the programs that have been talked about either through SBA and then potentially when USDA makes some announcements. And I can't actually hit my arrow button, so I need to say next slide. And you can go ahead to the next slide too. So the first thing is, if I don't cover what you want to hear, that is the link for where USDA has most of their resources that are going to impact your lives through COVID-19. So that is the research page on farmers.gov, and you can go ahead and go to the next slide. Yeah, so with the loan programs, if you're in the Farm Direct loan program, pretty much everything has been slowed down on those. There's they're suspending loan accelerations. They're stopping all the non-judicial foreclosures, and they're not going to refer any more foreclosures to the Justice Department to continue. If it's already been going through the Justice Department, that's up to the U.S. Attorney's discretion, and FSA. USDA has no involvement in that at that point. And you can go ahead and go to the next slide. So with the other loan programs, if you're in the guaranteed loan program or looking at it, guaranteed lenders can self-certify, providing their borrowers with subsequent year operating loan advances on line of credit. So that will continue to happen. They can provide emergency lines of credit if the current coronavirus is causing problems with the farming operation. They're going to look at lender requests for, temporary payment deferral when borrowers have a feasible plan or do not have a feasible plan reflecting family living expenses, operating expenses, and when debts can be repaid. There may be some temporary forbearance, but they're going to have to consider that, and that will have to be looked at by the agency. And we can go to the next slide. So looking at the main thing that most people are aware of, there was $9.5 billion in disaster payments that was provided for as a part of the CARES Act for producers impacted by COVID-19. Pretty much looking at the language of the act, this language is put up for specialty crop producers, livestock producers, including dairy and producers that supply local food systems, restaurants, grocery stores, and farmers markets. And we can go to the next slide too. We are waiting to hear how that money will be implemented. It's currently left up to agency discretion. The secretary has said it will be fair. I've heard rumors that details may be released this week, later in the week, early next week. The thought is it will provide specifically first for specialty crop and dairy and maybe some other livestock producers, but that's not clear what will come out first or how the programs will look. And so hopefully there will be information available if you fall under this. We don't know how horse producers are going to fall under this, but that money potentially would be available to provide assistance if in this process. So we can go to the next slide. So what are some other resources that we have available? So UME has a COVID-19 page available through the University of Maryland Extension website. That's the link. I put links in there, so when you guys get copies of all this, you will have that available for you. Hopefully once the CARES Act through USDA is available, we'll have some information up on that as well, so you can check there. I'm a part of the Ag Law Education Initiative. We're working on a list of resources as well. We don't have a link for that yet. That just started late last week, and hopefully all that will be available in the near future. And then my blog at agris.umd.edu, you can go to that tag, and if I force everyone to make sure when they post something that's related to COVID-19 and use that tag, it should populate with everything related to COVID-19. And we can go to the next slide. I think you can skip that slide too. The other thing that's available is the National Ag Law Center last week made a request to some of the legal specialists around the country to kind of work on a lot of the CARES Act issues, SBA issues that farmers are facing and have questions on, to provide a clearinghouse for those national issues that are national, but people are facing in each state, so we don't duplicate work. Those resources are available there. And then the Ag Law and Taxation Center in Iowa State has some good resources available. And I think we can go to the next slide, which should be my contact info.
Yeah, so what I didn't mention is that Paul is also a member of the Maryland State Bar Ag Law Council, and I know that he has in the past been very helpful fielding questions and finding resources for folks. So if you have a specific legal question that you need to find a resource for, I would imagine that Paul would be willing to field that question and forward it on to the appropriate contact if needed, right?
Yes, that's pretty much what I've been doing for the past 3 weeks, it feels like. But yeah, I can do that.
Yeah, so Paul is also an excellent resource out of the University of Maryland for anyone that has any questions potentially on interpretation or more of a legal spin on a situation, you know, in addition to Brooke, if you have something more imminent that, you know, that comes up. So we are now, I guess, moving on to Keith. And Keith is a commercial loan officer with Mid-Atlantic Farm Credit. I doubt Mid-Atlantic needs a whole bunch of introduction, but it will be great to hear actually from a bank how this is working from quote unquote the other side. And additionally, there are some additional resources that each individual banks are providing for their customers. So hopefully Keith can address some of those questions. Good morning.
Good morning. Thank you all for being out here, and I hope everybody's healthy and safe. As mentioned, we really don't need a lot of introduction probably on farm credit, who we are and what we do. We're the area is probably one of the, if not the largest agricultural lender in the area. We're hearing from a lot of our membership calls, just as we're trying to answer questions here. Our membership is calling in and asking questions as well. What we are looking to do, or what we are doing, is basically to stick to our mission, which is that to be as we have up here, the consistent source of credit for the agriculture community. We've always said in good times and bad, well, this is where we're really earning our keep now. Looking at this situation right now, focusing on that mission and moving forward with that to help individuals, help the agriculture community. One of the questions that I've been asked at different times is, you know, well, what are we doing? What programs do we have? Well, one of the things that, while I've been talking with many of the members and people that I work with, is there is no, I want to say, one size fits all type of program. We're working with individuals on a case by case basis to see what they need. Some people need more assistance, some don't need as much, some don't need any at all at this time. So this is what we're looking at, working with everybody, putting a program package, tailoring something, whatever that may be, to help them get through this particular situation. You can go on to the next slide on that. A lot of this information we've already gone over. Some of this already in coming into this as to, the numbers as to the when the PPP program started. When this first came out, Farm Credit was included as one of the approved lenders for this particular program in the CARES Act. Originally, it was that there were different farm credit entities across the country, perhaps, that were part of this and involved in this. We are now Mid-Atlantic Farm Credit. We have gained approval to do this, to administer these programs. However, this is very much, and this goes beyond me at this point, the multi-step program, the processes to get this involved, to do this, to be able to take applications, to be able to work with these particular programs. We're working on that. As you can see, it's in bold right there, that we're trying to get these processes put in place so we can begin offering these loans. At this time, we are not taking applications on these programs. We have not been, I guess, granted permission or access. I'm not exactly sure what that would be, but we have not been able to do that at this time. That could change this afternoon. That could change tomorrow. I'm not sure on that, when that's all going to happen, or the speed at which that's going to take place. Go on to the next. And as I said, my presentation was really just very short and sweet, to say we're out here to support agriculture, to support many of the people that are probably on this program today, are borrowers. We're here to help them, support them. If you wanted to learn a little bit more about what Farm Credit's currently doing, we have 2 landing pages out there. One is just an update page on the status and the information of that, and the other is some other information on Farm Credit, Mid-Atlantic specifically, what we are doing, some other programs out there. There's also one that I want to say that is the under the CARES link, that there are some other resources that are not just financial resources on dealing with some of the issues that people may be going through right now. With all of that, some updated information on that. Above all, if you have a question, reach out to us. Numbers are there. With that, all I can say is we're here to help everybody, to help the membership, help those folks get through this time frame. Thank you.
Well, thank you, Keith. That was great. So I think, again, I echo what Keith just said. I think it's important for folks to reach out to their lenders, whatever it may be, and try to, work out a plan, best you can do right now, for some of these situations. All right. Next up, we have Steve McHenry with MARBIDCO. For those of you that are not familiar with that, that's the Maryland Agriculture and Resource-Based Industry Development Corporation, which is a mouthful, which is why it's shortened up to MARBIDCO. Some of the resources we've talked about so far, as Jane indicated, are more stopgap efforts. Steve is the executive director of MARBIDCO, and he's going to talk about the plans that they have in place to help move you forward from there. So let's see, do we have Steve up? Here we go.
Can you hear?
Yep, I'm looking for your video. Where are you? There you go. Good morning.
Good morning. I hope everyone is doing well during these challenging times. And thank you very much for the invitation. I'm going to briefly go through a presentation that I hope is useful to the folks on the call. Again, as you heard, we are MARBIDCO, and we are essentially the state's agricultural finance authority. Next slide, please. We were set up by the state of Maryland to help specifically serve our traditional rural industries: farming, forestry, seafood, agriculture, and this includes the equine industry as well. Next slide, please. Before I talk about a new special program related to the pandemic, I did want to mention that we do currently offer 8 loan programs, and 4 of them require collateral security, and then 4 other programs have been funded by other agencies that involve a special purpose with a higher level of credit risk. So just be aware that they're there. I do want to talk just briefly about the 4 programs. Next slide, please. We call these core loan programs because we're using our money to fund these programs. We have a gap finance program that's quite popular with folks. I believe we've funded 11 horse farm operations totaling about $2 million using our Mr. Biff program. So this is available today for folks that need, significant money for, barn construction or farm purchase, that sort of thing. And then we have some other specialty programs there, or more targeted programs rather, for equipment and working capital, loans of up to $100,000. Specialized program for vineyard, hops, and tree planting. I don't know if any of you are doing that. And then a forestry program. I will note we have some special grant money available if your farm operation is located in one of the 5 southern Maryland counties or on the upper eastern shore of Maryland. We have a 5% equity match available from the regional councils in those areas for those particular programs. Next slide, please. Of note, the MARBIDCO Board of Directors last week has lowered by 100 basis points, or a full 1%, the loans charged in each of those 4 core loan programs I just described. So the Mr. Biff program rate today is 2.25%, which is very good. Next slide, please. And that's a program we offer in conjunction with commercial banks and the farm credit lenders. Mid-Atlantic Farm Credit is a great partner to us in this program. We can make a loan, our money, of up to $250,000 for a barn construction project, for example, or up to $500,000 for a real estate purchase. We're typically about 30 or 40% of the commercial financing needed using that program. And as I just mentioned, the interest rate has been reduced to 2.25% for the first 3 years. Next slide, please. So as I noted at the beginning, we've launched a special loan fund program to help farmers move forward during this challenging time. Virtually all farm operations have been affected in some way, some much more dramatically than others. And we thought we needed to get some money very quickly out on the street to help these enterprises. And as I mentioned, commercial equine operations are eligible. Next slide, please. So what do you have to be? Well, you have to be a farming operation that has been in business for some time. So you're currently operating, for example, as a commercial equine enterprise. I will note that nonprofit organizations are not eligible, nor are startup operations. So if you've dreamed of having your own horse farm and you just want to get started, this is not the program for you. There are other programs, but this is not the program. We do require a minimum credit score of 620 for the principal operators, which is, a pretty modest credit score. Next slide, please. We're offering loans of up to $10,000 max, $3,000 for working capital, which I'll explain what that is in a minute, as well as up to $10,000 for equipment purchases. The minimum loan request is $2,500, and again, the maximum loan request for everything is $10,000. Next slide, please. So what does working capital mean? It means things that you're going to be using in the planting process. If you need to buy new hand tools, you need to do some marketing or advertising, you need to hire some labor moving forward. That's what working capital would entail. Tangible equipment includes items that would have a significant useful life of 7 years or more. So motorized equipment, refrigeration units, things of that sort. I've also thrown fencing into this category since I think obviously those kinds of facilities that you would be installing would last more than 7 years. Next slide, please. The interest rate in this program is 3.25%. We're very flexible on the terms, anywhere from 12 to 36 months, you pick. The first 5 months or through August 1st, no interest will be charged on these loans. And then for the rest of the calendar year, the loans will be interest only. And then the loans would amortize, as I mentioned, for 12 to 36 months, starting on January 1st, 2021. And here's a neat feature of a loan program. All borrowers who make all of their payments as scheduled will actually get a 10% rebate or grant back at the end of the term of the loan. So it's a nice little incentive for folks to keep current on their payments. Next slide, please. What do you need? Well, everything is on our website. It's a very easy application. You can fill it out and submit it electronically. We'll obviously need the very short application form filled out. You need to have a brief business plan, talking 1 or 2 pages max. We need to know about your operation, how you've been operating, what your plans are going forward, a little bit about the business owners, that sort of thing. We need your most recent tax return. We need to see a recent bank statement from your business. If you don't have a business bank statement, obviously a personal bank statement would suffice. A balance sheet and an income statement. And that's pretty much it. It's a very simple application. I think you'll be able to fill it out quite quickly, much less complicated than the SBA applications, for example. And everything is available on our website. You can link right from the front page of our website. Next slide, please. And that's it. So I'll be very happy to answer any questions that folks have about any of our loan programs, in particular the pandemic adjustment loan program. Thank you very much.
Well, thank you, Steve. And shockingly, we're like exactly on time. Thank you. So again, another great number of resources there for folks to that can reach out. And I'm sure if you have any specific questions that are not addressed on this call, again, I'm sure Steve or someone else in his organization will be happy to address them. So now we're going full circle back to Brooke, who is going to address bankruptcy. One thing that overriding comment I might make about bankruptcy is most people are thinking of bankruptcy in terms of total liquidation. That is not the only option. There are options for what we call reorganization, which Brooke will address. And it may, in your particular situation, be a good idea. But again, I'll let Brooke address it because it's very fact specific as to whether that is the best way to go. But we thought we wanted to at least raise the issue so that folks were aware of that as a potential option. Welcome back, Brooke.
Unmute myself, sorry. Didn't want to hear the shuffle of my papers. So thanks, Corrine. So I'm going to deviate slightly. My program obviously is called Chapter 12 of the U.S. Bankruptcy Code, which is entitled Adjustment of Debts of a Family, Farmer, or Fisherman with Regular Annual Income. All those words have some meaning, and we'll want to keep them in mind. But my deviation for 30 seconds is I'm like, wow, look at all these loan programs out there. Before you file a chapter proceeding, you're going to want to make sure that you've used these other resources, because a chapter proceeding can work for you, but I like to think of it more as a background against which you can negotiate with your lender, or more positively, you can get loans to carry you through so you don't have to do a Chapter 12. And in certain instances, for instance, that payment protection program, if you filed a bankruptcy, you're not eligible. And I'm guessing, and Greer, I hope will comment on this later, that bankruptcy may disqualify you from some of these other SBA programs as well. So try and use your non-bankruptcy sources before you think about really getting into the filing scenario. On the other hand, you can't misrepresent who you are or what you can do, and you need to have a plan that actually works, which gets me to my sort of next comment I'll make later in a slide is you've got to have decent financial records, and you've got to have some positive source of cash flow. I mean, if you're just drinking water, or sorry, drinking money, and it's not generating positive returns for you, you really are going to have to think about possibly the terrible alternative of liquidation or severely contracting your operation. I mean, it's just, money doesn't grow on trees, and bankruptcy doesn't invent money for you. What it does is it buys you time and restructuring. Okay, so the high points of Chapter 12, it was designed for family farmers and closely held family farm entities. It's intended to be a quickie process. You're supposed to get a plan in 120 days. You can get some extensions on that, but it's supposed to be done very quickly. The biggest difference is how secured creditors get handled. Unsecured creditors don't get to vote. They can be paid less than 100%, but in order to do that, you have to pledge all of your, quote, disposable income, which is like the world's most complicated definition. But we'll talk a little more about that, but it basically gives you enough money for kind of your expenses and some not very generous living expenses, and the rest of your money has to be used to pay creditors. To be eligible, you have to have regular income, and more than 50% of your gross income has to be derived from a farm operation. They've raised the debt limit. It's now 10 million. It's actually a little bit more than that, but because it has some inflation increases. So I made the comment about a core of positive cash flow and reliable financial records on slide 3. If you're going to get an out-of-court adjustment with your lenders and get them to give you some space, if you will, all due respect to Mid-Atlantic Farm Credit, they don't just hand out money. They, want you to succeed and go forward. So you need to have some transparency with them, and you need to be pretty straightforward and plan on people asking some questions. The Chapter 12 process is supervised by a standing trustee who works for the Department of Justice. In many states, there is a standing Chapter 12 trustee. Here, our Chapter 13 trustees serve that same function. You configure, some of this I've covered already in slide 4, but the process is not cheap. You can figure you're going to have to spend $10,000, $20,000 at a minimum to get through this process. Normally, the lawyers are going to want a retainer up front. They can get paid through a plan, but of course, they're going to want to have some confidence that you're actually going to get a plan and that you're going to be successful in it. The annual income has to be, when I said regular income, it has to be sufficiently stable to enable the family farmer to make payments under a plan under Chapter 12. Why don't we go to the next slide? One concept you'll hear me talk about every once in a while is a bankruptcy estate. Essentially, everything that you own, when you file a chapter proceeding under any of the chapters, becomes a bankruptcy estate. There are some minor exceptions. You do get certain things that are exempt. For instance, retirement plans are exempt in Maryland. And so for that reason, you might not want to invade your retirement plan before you file a chapter proceeding because it's not part of the estate. I think I've covered pretty much everything else under this. In the interest of time, I'll keep moving on. But one thing I would say is the bottom point is try and fine tune your plan. If you're going to file, don't just stick it to your secured lender. You can call the lender. You can tell them you're about to file. They cannot act precipitously. If they do, there are a whole variety of clawback provisions, we call them, to get money freed up again if they try and set off your accounts or whatever. But best thing to do is to try and work with your lender and try and work with them and make a deal in the chapter proceeding. Life is much better. The basic rules, slide 6. You have to propose a plan that pays your priority claims 100 cents on the dollar. And that usually is all your post-petition expenses, the priority expenses like attorney's fees, and any current taxes and certain kinds of payroll taxes. Those are all going to have to be covered as priority expenses. You have to pay creditors as much as they would receive if the estate was liquidated. So in other words, if all your land and everything is worth $1 million, you're going to have to pay after payment of mortgages and whatnot. But if your net equity is $1 million, you're going to have to pay your creditors $1 million, or you can't confirm the plan. That's not usually a problem in these farm cases. Usually what happens is there's hardly any equity around. And if the operation was liquidated, nobody'd get hardly anything, which is why many people are pretty attracted, even on the creditor side, to Chapter 12. One thing I didn't put in my papers is you do have to file monthly reports in the process, and you need to keep close track of your cash. If you take cash out of these cases when you're not authorized, that is non-dischargeable debt in bankruptcy because you are considered a fiduciary because you get to stay in possession of your property. There's not a trustee appointed like in a Chapter 7 liquidation, which is kind of the point that Kareem was making, is that everybody thinks bankruptcy, oh, I'm going to get a bankruptcy trustee. What's he going to do to me or she? The answer is in a Chapter 12, you are the bankruptcy trustee. You've got some supervision over you, but you are the trustee and you have a duty to these creditors to conform with the rules of the bankruptcy process. There are what we call cram down provisions for secured creditors, and they're a big deal, and we're going to talk about them in a second. One thing that comes up in bankruptcies is, do I have to pay my secured creditor as soon as I file? The answer is no. That doesn't mean interest won't accrue if it's an over-collateralized debt. But in general, the process operates quite differently than in Chapter 11. Okay, secured creditors. This is the big deal. Cram down forces the bank or lender to accept the program you propose as long as it fits within certain parameters. So you can maintain your current debt program. You may think, hey, this is great. I got a 1% interest deal, monthly payments I can tolerate. Got an SBA loan. And somebody mentioned earlier, it could be as little as $100 a month. Probably don't want to change that. So you can keep that going. You can do what we call unimpair a creditor. Secondly, you could surrender property to a secured creditor. Secured creditor may not want the property, but it gets valued and it can be used to pay down that secured creditor's debt so that you have fewer unsecured claims, whether the secured creditor likes it or not. And finally, the way that things usually work out is you have to pay the creditor over time the value of the property securing the claim, and with interest, I might add. So you might have a farm that's worth $500,000, pretty good acreage, $500,000, but you owe the lender $750,000. $500,000 of that will be considered a secured claim. $250,000 will be considered an unsecured claim. You pay the lender the present value, which you can't do in the state court process. You pay them the present value of the $500,000 at an interest rate that would be set by the court that has to be reasonable. But the $250,000, that's paid out of a percentage of disposable income sharing with all the other unsecured creditors. Okay, value is the property. You can read the definition, which I've described. You can match payments to the life of the collateral. So you could extend, maybe your mortgage is about to mature or you had a balloon. Well, now you can, in a Chapter 12, extend that. Now, if the machine is only going to last for 5 years, no, you can't propose to pay for it over 10 years. You have to pay for it over 5 years. But land is pretty long term. You can't have 50-year plans, but you can certainly have a plan that's a 10 or 15-year proposed payment plan with a balloon at the end, very typically approved by the court. One problem I noted if you say live in Montgomery County is that the land may be worth tremendous amount as a non-farm parcel. And that kind of complicates your life in Chapter 12. Not so much an issue out in Western Maryland. Okay, why do they have these special rules? Well, what happened in the 30s is you'd have a lot of banks, they'd foreclose on the property. Okay, well now what's the bank going to do with the property? The answer is they can't do anything with it. So a lot of times they rent it back to the, farmer. And the farmer would be thinking to himself, well, wait a minute, what gives here? I mean, I'm working the land for the benefit of the bank. And of course, Congress looked at this and they said, well, wait a minute. You know, if that's what's going to happen, the value of the land is really only what it's worth when it's worked. Let's just have the farmer, pursuant to Chapter 12, just be able to give the lender the present value of what it would be worth with the farmer working the land. And so there was a famous case where they tried to have a 2-year moratorium on all farm mortgages in the United States. Supreme Court said that was unconstitutional. Chapter 12 is intended to deal with how you handle that problem. One of the problems that Chapter 12 overcomes is in a Chapter 11, if a bank, take the same example I gave before, $500,000 of secured debt, you got $250,000 of unsecured debt. In a Chapter 11, the lender can say, well, you know what? I want to vote as an unsecured creditor. I'm going to make a special election, and I'm going to say that my whole 750 is still going to be secured by that $500,000 piece of property. So if that property appreciates, I get the upside. That doesn't happen in a Chapter 12. It's been designed to avoid that. And moving along pretty fast here, Chapter 12 has special tax provisions. Maybe you sold a property or you want to sell a property, but you're going to have this huge capital gain. You bought the property way back when, and you can't tolerate that capital gain. In Chapter 12, only in Chapter 12, they have a special provision that that capital gain tax will be treated as an unsecured claim. So you could pay only pennies on the dollar. The IRS would have to share with perhaps your lender's unsecured claim. That's a really, really big deal and can mean really thousands and maybe hundreds of thousands of dollars. And you can still get your discharge at the end. I'm skipping along here. Let's go to slide 13, unsecured creditors, the disposable income. You take your gross income, subtract out reasonable business expenses, which can be pretty much consistent with what you've been doing in the past. You do get living expense allowances that are set by the Internal Revenue Service. You can ask for exceptions. Sometimes they're allowed, I would say, tend to be allowed, but you can't get greedy. And you do have to pay something meaningful to your unsecured creditors. At any rate, at the end of your plan, which can be from 3 to 5 years, you can get a discharge, and your life goes on, and you still have a family farm, and you're still in the business you wanted to be. So my sort of final tips are: don't wait till you're cashless. You got to have cash to play in this game. It's very hard to borrow money post bankruptcy. There are special lien provisions, but they're hard to employ. The other thing is that the clawback provisions. You know, some people are like, oh, well, how about if I transfer this to my kid ahead of time? Bad idea, because the liquidation test includes assets that were improperly transferred and preferences. So the other thing I want to mention is the final point is there is a new set of small business rules. If for some reason you fall out of the Chapter 12 process, there is a small business Chapter 11 process available. Its debt limit is $2.5 million. It's supposed to be streamlined. I would say generally, if you don't make it in Chapter 12, you're probably not going to want to be in a small business Chapter 11 either. And that's my remarks. Thanks.
Oops. Well, thank you, Brooke. And again, as Brooke mentioned, this is sort of a last resort, but we at least wanted folks to be aware of it. And even though it's a last resort, it might be a better option than losing your business. So if it comes to that, I'm sure Brooke would be happy to help direct you in that regard. So I guess we now move to Q&A.
Yep. We have a ton of questions that have been submitted and a few submitted in advance. So I am going to go ahead and actually start with the questions that were submitted in advance.
And sorry to interrupt real quick, but Carrie, did we actually introduce you? We did, right?
I think so.
Okay.
If you don't know who I am, I'm the executive director of the Maryland Horse Council and the publisher of the Equerry now. And we also work with the METS team, so the Maryland Equine Transition Service. It'll be 2 years in October, actually. So let's go ahead here and get started now with some of the questions submitted in advance. These, I think Greer might be a great option to answer. but again, these are, you know, whoever has specific insight, Brooke or Steve after. So first question we had submitted, and these are a little bit more particular instances, but I'm sure questions that many of the participants in the call actually have. What category does a boarding or lesson horse farm fall under for small business funds? Example, the CARES Act or the Economic Injury Disaster Loans. Applicant would not be an agricultural enterprise, so farm. So I think this might be where Greer was talking about different options for applying for those.
Yes, so I would say I don't have that one memorized. If you send me an email, I can look it up in the SBA's database and see if it's going to be one that should be eligible. But typically what they're considering when they're talking about farming concerns is a business who has over 50% of their income come directly from farming. So from producing goods through the actual process of farming. So you should be good, but again, there's a lot of little nooks and crannies that businesses can fall into. So I would say send me an email and we can go from there.
Great. Thanks, Greer. Second question is, again, kind of the same thing, but as asking about, am I correct in understanding farms, trainers are not eligible for the EIDL loan and grant? It only looks like ag co-ops.
Yeah, so again, it depends on the specifics of
Okay.
that particular business. A lot of them will not qualify for, but some, depending on the nature of the majority of their income, can get through the EIDL program.
Okay, so I'll
And Paul or Brooke, do you guys have any additional insight on some of those questions?
I have none.
So Greer's our go-to guy.
Yes, so we've got one more pre-submitted question, and then we've got a ton of questions submitted just now in the chat boxes. This came from Tranquility Manor. For the different grants and loans, again, same line of questioning with obstacle as we are agricultural with 7 employees or less full-time and do not pay into the Maryland unemployment and don't have a Maryland unemployment number. So we are unable to proceed forward, but we can provide that number and don't know the answer on how to address that. So Greer or Brooke, anybody have any insight into potentially if this operation would be eligible, what happens if they don't have the unemployment number?
So for the federal program, at least my bank didn't require any kind of state unemployment. Obviously, if you want to use money, you know, part of payroll is paying the unemployment taxes. If you don't have to pay any unemployment, you won't be able to use your loan for that, obviously, and you won't get any forgiveness. But I don't think that your eligibility is dependent on having a state ID number. They're just looking for your federal employment ID number, FEIN or TIN, depending on what you're saying.
Yeah. So when the state grant and loan programs came out, those were solely for businesses who had employees in the state. But when we're talking about the federal programs, that's not a problem.
Okay, great. Okay, so a number of questions submitted in the chat boxes today. The first one is for Steve from MARBIDCO and is from a co-host here. A question about whether eligible, whether nurseries, tree nurseries would be eligible for MARBIDCO loans.
Yes, nurseries, forestry operations are all generally eligible for MARBIDCO lending programs. And it certainly would also be eligible for our pandemic adjustment loan fund program. They have to be in Maryland, though. That's a key consideration. We're set up to help Maryland businesses. Pennsylvania, Delaware, and Virginia have to go somewhere else.
Okay. Great. So another question we had also received was about startup businesses that were supposed to open this spring. A lot of the grant and loan programs that we've talked about today were for existing businesses. Is there anything available for startup businesses I would say less than 6 months old, but even maybe less than 12 months old?
So provided that the business was, it's a difficult question to answer. Provided that the business had expenses and some kind of income prior to February 15th, you should be able to qualify for the EIDL. Payroll protection program may be a little bit more difficult. If you had one payroll, I'm going to defer to Brooke on that one. I think you should qualify. But again, it's if you can prove that you were in business, the SBA will work with you.
Yeah, I would second that with Greer. I mean, it really depends on, did you have a banking relationship and was there some effective business that existed?
Yeah.
Okay, wonderful. So the next question we had received was about the PPP loan, applying for the loan forgiveness. That's a process that happens at what time?
Well, as far as I can tell, it really is at any time after you've consumed your sort of 8 weeks. But
Okay.
it's interesting. The statute tells you what can be forgiven, but it really doesn't lay out any process. And I think until the SBA sort of at this moment, I'm guessing, is preoccupied with getting the program rolled out. Forgiveness comes later, and I assume there'll be a string of forms and regulations and setup as to how they want to do that.
Okay.
Yeah, just to add on that a little bit, what we're telling the businesses we work with is to make sure you document every penny that goes through the PPP program, because it's going to make your life a lot easier when it comes time for forgiveness, because the banks don't have the forms yet. The SBA is not even, I don't even think they've thought about it yet. That's probably going to come out in a month, if I had to guess. So if you have everything well documented, it's going to make your life easier. And I do know the banks have 60 days after you submit your information for forgivability to give a decision on if it's going to be forgiven.
And if you don't mind, to pick up one of the chat questions I saw, how do you prove it went to payroll and correct expenses? You have a payroll register that shows you dispersed the money, and you keep track of, a bank statement that shows where you made the transfer to pay the payroll or wrote the check. I think Greer has really hit the nail on the head. I mean, you really have to keep track of every penny. If you want the government to give you money, they can ask for whatever they want to make you do it or to get that benefit.
So I know we've got another question here. We've kind of reviewed this overall within the different presentations, but what specific programs can you highlight that are nonprofit specific or inclusive?
So PPP, nonprofits are clearly eligible for the PPP. I don't advise that many nonprofits. I'm on the board of one, but I sort of stay off of that subject for the time being. Somebody else is handling that. But nonprofits are eligible, and should take a look at it. I think there's a lot of benefit to it, particularly nonprofits. The church I go to, they run a nursery school, and that nursery school, clearly their employees would be, that whole operation would be eligible for paycheck protection loans. And yet, no surprise, the nursery school is closed for the time being. You might have charter schools, private schools, all those would potentially be eligible. Key is under 500 employees, and then there are various limits on how much money you can actually obtain.
What about some state options? I know we received a question about a Montgomery County grant potentially, but any state options or county options that you're aware of that are specific for nonprofits? And that's to anyone in the group.
Not me.
At the moment, the state has closed their funding. They had a grant and a loan fund, both have closed, and neither were open to nonprofits. I wouldn't expect them to open any up to them just because the state is expecting a $4 billion shortage in their budget, so they're going to try and help out the for-profit businesses first. SBA programs are now open to nonprofits, and at the county level, they are starting to open programs to nonprofits. The Montgomery County Public Health Emergency Grant Fund is expected to open tomorrow. On their website, you can put in your information to be alerted as soon as it goes live. And just one quick note on that, it is you have to begin it and fill it out and complete it and submit it in one sitting. You can't save it and go back. So get all the documents ready now because the funding is going to go very quickly. And they put up a list of everything you're going to need. So find out now, get it ready, get it in PDF format, and as soon as you get that email, go submit.
If I could second Greer's point in a little bit different way, so many of these, there is I believe, an appropriation for certain kinds of hospitals and public health facilities. So if you have a small nonprofit clinic or a nonprofit hospital, some of the rural hospitals have pretty small employees, staffs, they could be eligible for the PPP. I can't speak to whether the state has a separate program available for those kinds of public health facilities.
Okay. We just got one question in that kind of loops onto this PPP line of questioning. And I believe, Brooke, you did address it at some point about delinquent payroll taxes. If somebody does have delinquent payroll taxes, how should they proceed with the application?
Well, I think they need to figure out how to borrow money through one of these other programs to pay the delinquent payroll taxes. It's probably my kind of glib answer, but without checking the statute and its specifics, I don't know the exact answer, but I'm thinking you're going to have to get that problem resolved. And usually, remember, these kind of delinquent payroll taxes means that you involuntarily borrowed money from the government. You took the money from an employee paycheck and you didn't remit it to the government. They really don't appreciate that.
Okay, great. Let's see, next question we have is about resources out there for sole proprietors with no employees. And that's again for anyone, Greer, Brooke.
So if they under $100,000, they're eligible for PPP.
Yes.
As long as their income is under 100, or that they're only eligible for up to 100,000.
Because they're the only person in the business, they have to have their wages, salaries, and so on. A little bit complicated calculation, but not too complicated. Basically, it has to be under $100,000.
Okay.
Yeah, and all of the SBA programs are eligible for sole props, 1099s, and those without employees.
Great.
All MARBIDCO loan programs are open to sole proprietors.
Oh, wonderful. Thanks, Steve. Another PPP question regarding the interest rate. Is it variable, or was it, I think you had mentioned somewhere between 1 and 3 3/4 possibly, or 4%, but what is the actual PPP, or how is it calculated?
I actually never figured that answer out. All I know is that there was a 1% guaranteed margin to the bank by statute for loans under $350,000, and then there's a sliding scale as they go up. But I never actually found out the answer to that question.
Okay, so I can definitely follow up on that one.
I can just address that real quick.
Sure.
Though the feds have set the interest rate at 1% for the part that is not forgivable, some smaller community banks have gotten permission from the Treasury to charge up to 4%. Because I guess some banks aren't efficient enough to make any money at that 1%. So some have permission, but I actually haven't seen any who do.
Okay. So none thus far that you're aware of, at least.
Yeah, none that I've worked with. Like if you're going to work with BOA or M&T or any of those big guys, they're all going to be 1%.
Okay. That's good to know.
And you should also, kind of as a corollary to what Greer said, the Fed is also open to spigot with respect to making loans to those big banks too, and changing their collateral requirements and so on. So the banks, and I'm not picking on the banks in any way when I say this, they're able to get this money for less than 1% that they're going to lend to you, and they're getting a guaranteed 1% margin. So banks they jumped on this. They, you got to hand it to the administration and Congress. They understood you got to make it so the banks want to do this. So they've got it set up so they want to do this.
Great. So I think that, I mean, we did, Greer, thank you for addressing the Montgomery County Public Health Emergency Grant. And we'll be able to provide a link to that to our attendees after the meeting. But we went through most of the questions that we had submitted throughout. Are there any additional questions now? We're pretty much on time, but if you have any last additional question, you can go ahead and submit it into the chat box, either privately to me, Carrie Hall, or to the Maryland Horse Council.
Are there any other speakers have any final comments? I'll give my final comment. I think Brooke had the best piece of advice probably for not only people submitting anything but doing anything online. Make sure you got everything scanned in before, because I cannot tell you the number of times I've done any kind of online form or application and it's crashed in the middle, or you have to go and get something and you can't do it. And then my final accolade goes to Steve, who, one of the fun things about being on hundreds of these video chats is you get to see people's backgrounds, unless people are fake like me and put fake backgrounds. But I want to thank Steve for supporting one of our wonderful Maryland horse establishments, Waradaca, with his Waradaca beer there in the background. So thank you, Steve.
And the other thing I may also add is that, you know, if this hasn't come across during this presentation, is that things are changing daily, by the minute, very rapidly. So what we said today may change by tomorrow or even this afternoon. So be sure you have those contacts that you'll get today, because these are the folks that'll be on top of everything. And a lot of these things haven't been fully implemented and new programs are coming into play. So this is certainly not a static event.
Great. So any last comments from our presenters? Otherwise, I will just let everyone know. We'll send out the link certainly for the Montgomery County Public Health Emergency Grant, and I'll follow up with Greer and a couple of our other presenters on the specific questions regarding boarding and lessing and training operations, and get that out to everyone. But continue to check your junk mail just in case. I know that some of the emails that I sent last night with the Zoom presentation information did go to spam. So just check that. And again, thank you all for joining us today. It's certainly been a pleasure. Sure.
I just want to jump in and say that I just really want to thank our presenters today for being so incredibly generous with their time and their knowledge. And I think the information that was shared today was really terrific. I hope everybody found it as helpful as I did. And just thanks a lot.
Great.
Yep, and I echo that as well. Thanks again.
Wonderful. Perfect.
And thanks to all the participants as well. So
yes,
for hanging in there.
Thank you all.
We're gonna close this down, and once again, thank you for the speakers and for everyone for attending. Bye bye.
Thank you.
Thank you.